Consistency in trading is not merely a goal, it is the very essence of mastery, the elusive thread that weaves together the fabric of long-term success in a domain defined by chaos and uncertainty. Every trader, from the wide-eyed novice to the battle-hardened veteran, shares a singular obsession, the desire to achieve steady, reliable profits day after day, month after month, without succumbing to the emotional turbulence of euphoric wins, followed by soul-crushing losses. Yet for all its allure, consistency remains a rare and precious achievement, attained by only a select few. The question that haunts every trader is not whether they understand the markets, possess a viable strategy, or face external conspiracies. The markets are not inherently malevolent, nor are they an unsolvable puzzle. The true obstacle to consistency lies not in charts, indicators, or economic data, but in the intricate and often treacherous landscape of the human psyche. Until traders confront this profound truth, that consistency is a psychological triumph rather than a technical one, they will remain ensnared in an endless cycle of hope, failure, and frustration, forever chasing a mirage they cannot grasp. Before we continue, make this commitment. This channel isn't about quick fixes. It's about developing traders with mental strength and discipline. If that resonates with you, join us. Subscribe now so you don't miss any of our upcoming videos. Stay until the end and keep progressing with us, one mindset shift at a time. This video isn't just another trading video, it's a mirror for your mindset. Like now, comment what resonates and stay until the end, because one idea here could change how you think and how you trade. Let's go. The trader's journey often begins with a spark of possibility, ignited by a tantalizing glimpse of what trading promises: financial independence, intellectual challenge, and the thrill of outwitting the market. Perhaps it's a viral video showcasing a trader's lavish lifestyle, a friend's tale of a quick windfall, or a book that unveils the seductive mechanics of the markets. This initial excitement propels the trader into a frenzy of learning. They immerse themselves in the study of price action, memorizing candlestick patterns, mastering technical indicators, and crafting or adopting a trading strategy. In these early days, the first taste of success, a string of winning trades, feels like a revelation. It's as if they've cracked the code to the market's secrets, and consistency seems just within reach, a natural extension of their newfound prowess. But the market, in its infinite indifference, soon delivers a humbling blow. A losing streak emerges, unraveling their confidence. The strategy that once seemed invincible now appears fragile, even broken. Doubt creeps in, followed by fear, frustration, and an overwhelming urge to fix the problem. In this moment, the trader's focus shifts from execution to reaction, and the seeds of inconsistency are sown. The market is not a machine that delivers predictable outcomes. It is a living, breathing entity, chaotic, mercurial, and often irrational in the short term. Some days it trends with elegant clarity. Others, it stagnates in aimless ranges. It may react violently to news or shrug off seismic events with bewildering apathy. To expect consistency from such a force is to misunderstand its nature. The market owes no one stability or fairness. Thus, the first and most critical error traders make is seeking consistency in the market itself. True consistency, the kind that transforms trading from a gamble into a disciplined craft, must originate within the trader. It is born from their ability to execute a plan with unyielding precision, to manage risk with unwavering discipline, and to maintain a steady mindset regardless of the market's volatility or their own emotional storms. This is where the psychological battle begins. The human mind, shaped by millennia of evolution, is wired for survival in a world of immediate threats and rewards, not for the probabilistic long-term thinking that trading demands. Fear and greed, primal instincts rooted in our biology, become the twin saboteurs of consistency. Fear manifests as hesitation, causing traders to exit winning trades too early, skip high-probability setups, or abandon a strategy after a few losses. Greed, its equally destructive counterpart, lures traders into over-leveraging, chasing impulsive trades, or holding positions beyond their planned exits in pursuit of ever greater profits. Both emotions lead to decisions that are not rational but reactive, breaking the chain of discipline that consistency requires. Picture a trader who, after 3 consecutive wins, feels invincible. Greed whispers, "Double your position size, this is your moment." A single misstep erases their gains, proving that emotional impulsiveness is the antithesis of stability. Or consider a trader reeling from 3 losses in a row. Fear convinces them to take a reckless, oversized trade to recover their losses. The market, unmoved by their desperation, delivers a devastating blow, turning a manageable setback into a catastrophic one. The pursuit of consistency is further undermined by a common misconception that the perfect strategy is the key to unlocking steady results. Traders often believe that if they can just find the right system, a magical combination of indicators, timeframes, or setups, consistency will follow effortlessly. But no strategy, however sophisticated, can compensate for a lack of psychological fortitude. A trader with the world's best system will still fail if they lack the discipline to follow it through inevitable drawdowns, manage risk effectively, or resist the siren call of emotions. Conversely, a trader with a simple, even mediocre strategy can achieve remarkable consistency if they master their mindset and execute their plan with unwavering commitment. The strategy is merely a tool. The trader's psychology is the hand that wields it. Consistency, then, is less about the market and more about the trader's ability to transform trading into a disciplined process, akin to a casino's relentless application of its statistical edge. A casino doesn't predict the outcome of a single roulette spin or blackjack hand, nor does it need to. It thrives because it trusts its edge and applies it consistently over thousands of bets, letting probabilities work their magic. Traders must adopt a similar mindset. You don't need to win every trade or outsmart every market move. You need to execute your strategy with precision, manage risk with rigor, and trust that your edge will prevail over time. This shift from chasing outcomes to mastering execution is the foundation of consistent trading. Yet, bridging the gap between theory and practice is where most traders falter. Understanding the importance of discipline is one thing. Living it is another. Books, videos, and mentors can illuminate the path, but they cannot shield you from the emotional storms that arise when a trade goes against you or when a winning streak tempts you to break your rules. Discipline is not a concept to be studied. It is a muscle tobe built through relentless repetition. It is unglamorous, repetitive, even boring. A stark contrast to the adrenaline-fueled excitement that draws many to trading. Traders who crave the thrill of every trade, who treat the market like a high-stakes game, sabotage their own progress. True consistency feels calm, structured, almost mechanical. It's the quiet confidence of knowing exactly how you'll respond to any market scenario, not because you can predict the future, but because you've trained yourself to act with precision, regardless of the outcome. One of the most insidious barriers to consistency is the endless quest for the perfect strategy. When losses mount, traders often assume their system is flawed and abandon it in search of a better one. They hop from one approach to another, chasing the next big thing, never staying with a strategy long enough to let its edge play out. But every strategy, even the most robust, will endure losing streaks and drawdowns. The difference between success and failure lies not in the strategy's perfection, but in the trader's perseverance. A consistent trader trusts their edge, weathers the inevitable storms, and stays the course, while an inconsistent one panics and jumps ship at the first sign of adversity. This cycle of strategy hopping is a psychological trap rooted in the fear of failure and the illusion that success lies just one system away. Another psychological pitfall is the way traders measure success. Many equate consistency with daily or weekly profits, but this is a dangerous oversimplification. Even the most skilled traders endure, losing days, weeks, or months. Consistency is not about unbroken winning streaks. It is about executing your plan with unwavering fidelity over hundreds, even thousands of trades. It's about trusting that your edge, applied consistently, will yield results over the long term. Obsessing over short-term outcomes blinds traders to the bigger picture, preventing them from building the habits that lead to lasting success. The market rewards those who think in terms of probabilities and time, not those who chase fleeting wins. To break free from the cycle of inconsistency, traders must undergo a profound psychological transformation. The first step is to redefine success. Stop judging trades by their outcomes and start evaluating them by their execution. A trade that adheres to your plan is a victory, even if it results in a loss. A trade that deviates from your plan is a failure, even if it happens to be profitable. This mindset shift trains your brain to value discipline over results, laying the foundation for consistency. The second step is to detach your self-worth from your trading performance. Too many traders tie their identity to their profit and loss statement. A losing day makes them feel like failures as human beings. A winning day inflates their ego to dangerous heights. This emotional volatility fuels inconsistency. Traders chase highs and flee lows. You are not your trades. You are the architect of a process, and your value lies in your ability to execute it with precision, not in the market's temporary verdict. The third step is to embrace consistency as a lifelong practice, not a destination. It is not a trophy to be won or a puzzle to be solved once and for all. It is a daily recommitment, a habit forged through countless small choices. The moment you grow complacent believing you've mastered consistency, the market will humble you. The best traders understand this. They remain vigilant, knowing that inconsistency is always lurking, ready to exploit any lapse in discipline. They cultivate humility, recognizing that the market is vast, unpredictable, and indifferent, a force that demands respect, not conquest. But the deepest layer of this psychological journey lies in confronting the subconscious forces that undermine consistency. Many traders fail not because of a lack of skill, but because of self-sabotage rooted in their beliefs about themselves. Deep down, some traders don't believe they deserve success. They may consciously strive for greatness, but if their subconscious harbors a self-image of struggle or failure, they will find ways to undermine their progress. A trader who's up significantly for the week might suddenly take reckless risks, giving back their gains in a single trade. They tell themselves it was bad luck, but often it's their subconscious pulling them back to a level they feel they belong at. Trading, then, becomes not just a technical challenge, but a confrontation with one's own identity, a battle to redefine who you are and what you believe you're capable of achieving. Consistency also demands patience, a virtue that runs counter to our brain's craving for instant gratification. Every winning trade releases dopamine, and traders become addicted to the rush, chasing more wins by overtrading or breaking rules. To build consistency, you must rewire your brain to find satisfaction in the process itself, in the act of executing a trade perfectly, regardless of the outcome. Celebrate discipline, not just profit. Reward adherence to your plan, not just the dollars in your account. This rewiring is not easy. It requires deliberate effort to shift your focus from short-term rewards to long-term growth. Journaling is a powerful tool in this transformation. A trading journal is not just a record of wins and losses. It's a mirror that reflects your psychological patterns. Over time, you'll see not just market trends, but your own tendencies, Moments when fear led you to exit early, when greed pushed you to hold too long, or when impatience drove you to take low-probability trades. Awareness is the first step to change, and a journal provides that awareness with brutal clarity. Without it, you're navigating the markets blind to your own weaknesses. Ultimately, consistency is not about the market at all, it's about you. The market is a neutral force, a canvas of probabilities that neither knows nor cares about your existence. The candles on your chart are indifferent to your hopes, fears, or dreams. The only variable you control is yourself, your actions, your discipline, your mindset. This is both the burden and the gift of trading. The burden lies in the relentless need to confront your flaws, to face fear, greed, impatience, and self-doubt with unflinching honesty. The gift lies in the realization that you hold the key to your own success. Every trade is an opportunity to choose discipline over impulse, process over outcome, patience over haste. Imagine two traders starting their journey today. Both learn the same strategy, both dedicate the same hours to practice. One treats trading like a slot machine, chasing wins and abandoning rules when emotions flare. The other treats it as a craft, meticulously following their plan, journaling their trades, and embracing patience. A year later, the first trader is burned out, broke, and disillusioned. The second, though not necessarily wealthy, has built a foundation of discipline that will carry them toward mastery. This is the power of consistency. It compounds like interest in a bank account, turning small, steady actions into transformative results. Consistency is not glamorous. It is not the adrenaline rush of doubling your account in a week or the thrill of calling a market top. It is quiet, repetitive, even tedious. It is the daily grind of showing up, executing your plan, and trusting the process, even when the market tests your resolve. But those who embrace this grind, who fall in love with the boring discipline of trading, are the ones who unlock the freedom that drew them to the markets in the first place. Consistency is not a myth or a secret, it is a choice. It is the choice to prioritize execution over emotion, to value process over profit, to master yourself when the market tempts you to stray. Make that choice trade by trade, day by day, and consistency will cease to be a distant dream. It will become your reality, forged not in the chaos of the markets, but in the quiet strength of your own mind.